Fed slashes prices. Credit scores judging you. No money down, no CASA.
Next on Real Estate News You Can Use.com. Welcome to Real Estate News You Can Use with Keith and Ruben. What's up?
How you doing, dude?
Chilling.
Chilling like a villain.
How things?
Awesome. Things are looking great.
Yeah?
Things are awesome. Things are doing really well.
Awesome.
Guess what just happened? We did a show. We came back. We took a break, and we're doing another show. And we have some really good news to announce.
Is it real estate related?
Well, not only did Sunday did the Feds cut rates by 1/4 point, but they just reduced rates again by 3/4 point. So in 3 days, the rates have reduced the short-term rates by 1 full point, Ruben. And I think that's a huge positive for not just the economy, but it's also a huge plus for the real estate market as a whole going forward.
Are you getting ahead of yourself again?
I probably am. I'm just so excited.
If this is your first time on the podcast, Real Estate News You Can Use is a real estate and mortgage-related podcast where we talk about the 3 most recent articles.
I'm definitely in the wrong place. I gotta
get out of here. Yeah, okay. 3 most recent articles concerning real estate. Give you a review and give you our own little commentary about it, our own way.
Yeah,
right.
That's what we do.
All right. So why don't you go ahead?
All right. Listen. The rates cut the rate. The Fed cut the rates by 3/4 point. The short-term rates are now at 2.25%.
That's right.
This is a huge plus, Ruben. You know, last episode we talked about that historically the rates are about 3 points, 3 points away from each other in terms of the long-term rate and the short-term rate.
Right.
So if the short-term rate is now at 2.25%, what does that mean?
Going to be somewhere in the 5s for a long time.
We should be somewhere in the 5s
right.
At some point soon in the rates for a 30-year purchase of a mortgage purchase.
Well, I
think that's huge. It's a huge plus.
Yeah, I mean definitely. I mean it's definitely a plus, but it also doesn't mean that it happens immediately. You know what I mean?
No, that's a good point. What in terms of turning around the economy?
Right.
You're absolutely right.
So definitely, whoever you're working with as far as mortgage professional trying to get yourself a loan to buy or refinance, definitely let them, find out what's going on, how it affects your, qualifications, because obviously lenders are being even more strict than ever.
Right.
And we're actually going to be talking about that later on this episode. But definitely good news. For sure.
Yeah, my recommendation is, if you have a mortgage broker that you're working with, which tends to be better in an environment where rates are moving around like crazy, because a mortgage broker, as you know, Ruben, has the ability to float out the loan to many different investors.
That's right.
Where if you're working with just like a big boy like a Bank of America, you're only going to be able to lock in your rate with one company.
That's
but
right.
if you go with the mortgage lender, you're going to be able to float out your rate with a couple different companies. So as rates change, as you get closer towards the closing of your loan, you can lock in your rate at a different rate with a different investor. So
I couldn't have said it any better.
It's a huge plus to work with a lender at this time.
Well, obviously, talk to someone who's competent about it and who knows what this means for you.
Yeah, I'm a mortgage lender. I can help you. That's not right. So this is a huge plus, man.
You just like flirting with the boundaries, huh? Well, what we can do. Next articles. Well, first of all, if you want to read about that article from bankrate.com, go to renewsyoucanuse.com.
And don't forget the new recommends button. I think you're going to really like it. It's getting better every single day.
Every single day.
Every day. Things are getting brighter.
RealEstateJournal.com. Credit scores find new ways to judge you. How would you feel if someone declined or approved the loan based on how you pay your cell phone bill? Well, that's pretty much what it's coming down to, Keith.
Yeah, it's a good thing. It's a good and bad thing, I guess.
It is a good and bad thing. Why don't you talk about the I don't know. Use your choice.
I think the thing that I like about this is if you are a newbie in the market and you're making $50,000, $60,000, $70,000 a year, depending on where you live, and you rent from your mother or something, and you can't use that as rental, but you have a couple little things like you pay your utility bill on time, you pay your cell phone bill on time, or a couple other little things on time, it's going to reflect in your credit, and there are estimates that about 4 to 6 billion.
4 to 6 billion.
6 to 45
6
billion.
to 45 billion people that fall into that category.
Can fall into that category, and that's a lot of money that banks have the ability to look at, so that they can judge you better as to what's going on. So that's a good positive. The downside of that is that if you're not paying it, it's going to look.
The downside is, the downside is that a lot of people who understand how credit works right now, may let some things slide that they know that are not
as important
counted. Right, exactly. Yeah. They might make sure to pay their credit cards. They may make sure to pay their car loan or whatever, student loans. But let's just say they don't pay their utility bills on time. You know what I mean? You have to make. Now, I guess now the rule of thumb is just pay all your bills on time. Don't even worry about it.
Right.
No
more having fun. Whatever you do, don't have any fun. Because if you have fun, it's just ruins you.
Sure.
Whatever, dude.
Check out the full article at renewsyoucanuse.com. See the time?
I can't tell what time it is.
Oh, I can't tell what time it is.
Yeah, so we'll never know if we're on the right time or not.
Oh. Anyways, realestatejournal.com. We have another article from them. Wow, pretty good source.
Yeah, they are a good source. Sure.
No money down, you're out of luck. No money down, you're out of luck.
Yeah. No money down, no CASA.
This is a funny article, actually, because it first starts off by talking about someone who bought at the wrong time.
Yeah.
But it was good for them to buy, because if they didn't buy when they bought, they probably would never have bought a house. Because a lot of people who bought a year ago bought with no money down. But he's happy being in the house.
You're absolutely right.
He's happy being in the house, and now that
even though it's worth less today,
he's happy because
he has a house.
But now, a lot of people who want to buy with no money, they're out of luck.
They are out of luck, and you need to try to get 10% to put down. And the best method, and I think we talked about this before, Ruben. If you have a tough time saving, hopefully you're working with a company that has an investment savings plan, and before you get your check, it goes right into another savings account or a credit union, so that you don't even see it. You pay yourself first before you do anything else, so you save your money so you can buy that house.
Exactly.
Right? You've got to do something creative to be able to do that. Give it to your parents or something. Whatever you do, you just got to try to save your money again, because, and some estimates are saying that it might go back up to 20% that you need to put down. And that's what you needed to put down way back when.
Way back when the whole housing boom was never even in existence.
Right.
Pretty much if you're teetering from having no money down to maybe even 5% down, and even that is kind of sketchy, or forget about owning a house.
You need to look right now at least 10% down.
Seriously,
you have to put at least 10% down.
There are lenders who will lend at 5%, even 3% if you can get an FHA loan.
Right.
But
that's providing that the house will value out when you get an appraiser out there.
True. There's a lot of challenges, obviously.
There really are. So you have to really be careful on what you do there.
Right. Exactly.
Back to our recommends. Just want to point out that we have a new. The website looks fabulous. It's very appealing to the eye. There's some new features in there that Ruben and I have worked on. Mostly Ruben on the eye appealing thing, and we've added a new page called Recommends. So go to the link called Recommends, and you'll find some new features in there that we believe you're going to like. Whether you're a buyer, a seller, or a real estate agent, there are some features in there. Or if you're a web person.
Web guru,
you'll find some features in there that you'll be surprised about.
And make sure you check out the advertisement the little spoof that we made.
Yeah. And when you watch that advertisement on the upper left-hand corner, remember, we're not being political, just being humorous.
Just being RE News you can use.
Keith being Keith.
Keith being Keith. I'm Ruben.
I'm Keith.
Make it a great day.
Bye-bye.